Hello and welcome back to Miami Realty Rundown. I'm Ideal.
Carlos is here.
And today we have a very special guest from Patriot Pacific, Edgar Lopez. He is a lender for Patriot Pacific and specializes specifically in VA loans, which is our topic for today. So Edgar, before we begin, do you want to tell us a little bit about yourself, how long you've been in the business, and what got you into the mortgage industry?
Yes. So Edgar Lopez, I've been in the business for over 20 years. Started in 2003 and very passionate about helping veterans. I find it very important to help them buy a piece of what they bravely protected. And yeah, just educating people through the whole buying process. Our company does offer all the other products as well, not just VA, but I really focus a lot of my business with helping veterans.
That's amazing. Thank you, Edgar. So let's start with the first question, right? What is a VA loan? And I guess who would qualify for the program?
Yeah, no, that's a great question. So the VA loan is intended for our service members, whether you're Coast Guard, Marine, Army, Navy. Did I miss anybody?
Air Force.
Air Force,
Force.
thank
Does it
you.
include Coast Guard?
Yes, Coast Guard is
Coast Guard,
included.
okay.
Yes. So those are the people that are eligible for the loan. And of course, once they serve, I don't know the required time for each individual branch, but most of the active service members, once they leave, they let them know that if they're eligible or not. Because I know that there are some reservists that might serve only for like a year or maybe 2 years, but they don't become eligible for the VA program. But most of them do, and they'll be notified once they end their time of service.
So reservists have a different qualifying requirement.
Yeah, within the branch of service that they belong to,
Right.
not necessarily for the loan.
Okay. So basically active military or
Active
full-time military
Full-time military
are
definitely
are
are definitely eligible for the loan, and then people that are veterans now.
right. Okay. Or have no longer
Yeah,
In service.
in service.
correct.
So obviously VA, everyone knows it for zero down payment,
Correct.
right?
Yes.
So what does that mean for our viewers?
Yeah, so what that means for the viewers is you don't have to put any money down. You do have closing costs that you have to pay for, or we can always get a seller concession to cover those closing costs in certain circumstances. But that's really what it means for them. They don't have to come in with any money out of pocket for the down payment.
Okay, so basically, just like we've talked about FHA, conventional loans, non-QMs or whatever, we usually have what, 3.5 to 25%.
Correct.
VA doesn't need that.
That's
That down
correct.
payment you wouldn't need it if you were from the VA.
Correct, which is a big savings.
Big. Yeah.
Yeah.
Credit scores. Okay. Are there any, so for FHA, there is a specific credit score that they should have without having, a higher, accruing a higher interest rate, right? Is that the same thing for the VA program?
Yeah, the VA program does have a lot of flexibility. We're allowed to go as low as a 500 credit score with the VA loan and still be able to help them get financed to buy their first home.
Okay. Awesome.
All right. Walk us through the loan process or the pre-approval. Does it differ from traditional loans, or is it basically the same
That's a
thing?
great question. So it doesn't differ very much. I mean, the requirement of paperwork is a little bit different in regards to we need a certification of eligibility to make sure that you're eligible for the program. We also need DD 214 if you're a veteran and no longer in service. So just be those additional documents, and then plus your pay stubs, W-2s if you're W-2'd, or tax returns if you're self-employed. The nice thing too about this loan is that you can go up to $3 million with the zero money down.
Oh,
Wow.
Yeah.
That's
a big chunk of
So
change.
we do have a lot of very successful veterans that are self-employed, own businesses, and are generating really good income where they could take advantage of that program.
Wow.
Okay, I'm gonna go off on a tangent. So,
No, go for it.
okay, I have actually two questions.
Yes.
First one, and then I'll go to the 2nd. So, if you let's say they were active military, done, their contract is over,
Yes.
they're now regular citizens. Let's say they join the reserves. Is there a difference there, or can they still apply based on their previous
Well, the
military?
nice thing about that person that went active to now reserves, they probably have a full-time job. So that's one income, and now we have a second income.
Correct.
So that's going to allow us to have a bigger buying power than if just having one income. But it's not going to deter them from not qualifying.
Okay. And then I forgot the second question.
It'll come back to you.
Come back to it.
We'll move on and then go to the next one. So, the VA funding fee.
Yes.
What is it, and can it be waived or rolled into, or is it like something that has to like stay?
So the VA funding fee is 2.15% of the purchase price, and that's going to be financed unless the veteran chooses to pay for that amount. Otherwise, it's just added to the loan. That's also something that we can negotiate with the seller and get a concession to cover the VA funding fee entirely. That way they don't have to carry it on the loan. But in most cases, everyone just gets it financed into the loan.
Okay, so it's not taken away. It has to be financed or paid up
Correct.
upfront. Paid upfront.
Yes, and there is a but, which is if you're a disabled veteran, you usually get that waived. And it's on your certificate of eligibility. It would show if you're exempt from the VA funding fee. And in some cases, if you're 100% disabled, you're going to be not only waive the VA funding fee, but also property taxes, which is very huge because that's one less expense that the veteran needs to worry about.
Yeah. So my friends that are listening that are VA, we had this argument. You know who I'm talking about. And I told you no, or I told you that how the hell is that possible?
Yeah.
You were right. So I'm sorry. Don't. Oh, I shouldn't have said that on video. Damn it.
It's okay. I'm sure they can edit it out.
I don't like telling people they're right. Okay. So, and this actually goes to the same person. So can you do second homes or investment homes for VAs? Or does it have to be only primary residence?
So the VA loan is for primary residence. Now, what you can do, and what I suggest to a lot of my young veterans, instead of buying the Hellcat, let's get you a 4-unit property. And that way, 12 months later, you can rent out all 4 units. You have rental income coming in. And now you converted that VA loan into an investment vehicle for you. And that's producing income for you.
But you have to live in the property, one of the
Initially,
units.
yes. But after 12 months, you can rent out all 4 units.
Okay, son, are you listening?
Yeah. Now, the other thing too that you can do is if, let's say you already own the 4-unit property, you would like to buy a new primary residence, you don't want to put any money down, then what we'll do is we'll refinance you out of the VA loan, apply for a one-time restoration of your entitlement with the VA, and once that's done, we put in a conventional loan. Your VA is completely freed up again, and now you can go and buy your other property with 0 money down. And in that case, you can always go and buy another 4-unit and do the same thing.
Do the same
Live
thing,
in one
yeah.
unit after 12 months. The only thing you're not going to be able to do is do the full restoration.
You
Because
can't do
already
that
did it.
twice.
Correct. You can
Okay.
only do it one time.
One time period?
Yeah, correct.
Okay.
Yeah. So you would at that point either have to sell the property, because if you refinance out of it, it's not going to restore it completely. So if you use your VA loan again, then you are going to be required to put some form of down payment. And there is a calculation that we do based on how much entitlement you used from your first transaction to be able to use a VA loan a second time when you have an existing one. And right there, it will determine how much money you have to put down.
Yeah, look, in my opinion, our boys and girls have put in or sacrificed a lot,
Oh, yeah.
especially if they've been in combat and overseas. So, yeah, hell not. Why not give them something back?
Absolutely.
Correct. Yeah, no, I find that very important. You know, I mean, they bravely protected, so let's get them a
Let's
piece
give
of
them as
that.
much as we can.
Exactly. And that's why it's important to educate them and come together like we're doing today and share this information with them. Because a lot of times, too, our combat veterans, I mean, they go through a lot. They deal with a lot of PTSD in some cases, and they already feel discouraged because of they're out of the military or they suffered stuff, and then they feel discouraged of even becoming homeowners. But when we offer them that education on how to do it, then they're going to be more entitled to become homeowners.
Okay, little tangent again.
Yeah.
Sorry. So, can you think of any story, right? Talk just about
Yeah.
what you just talked about right now,
Yes.
where there was a veteran that, was shit out of luck or something, or was feeling down or whatever, and was managed to get out of it and find himself a home or herself a home,
Yeah.
and had at least a good day.
Yeah. Well, right now I have a particular veteran that has gone through a lot, and I'm helping him repair his credit. Even though we can get him in with the 500 credit score, he's going to be a much better financial situation if we're able to fix his credit, which I have him with someone doing that, but he didn't even know that that was an option for him. And he just wasn't even interested in becoming a homeowner. But after having several conversations, now he's more inclined to do it.
Good.
And the fact that he's a disabled veteran, he doesn't have to pay the funding fee. His income, we get to gross it up by 125%. So just to give you an idea of what that looks like is if you have somebody that has an income of $6,000, we gross it up for qualifying purposes by 125% or 1.25. That brings us up to 7,500. So now I have an additional $1,500 of income that I can use to qualify, and that's way more buying power than somebody that is not a disabled veteran.
Yeah,
That's awesome.
that's really good. I'm glad you guys are able to do that for them.
Yeah.
And
I mean,
every little bit helps.
Exactly. And just understanding everything that's available to them, educating them. I mean, something that's not mortgage related, but veterans that are disabled, they get a lot of different benefits. I mean, even like parking on the beach is free for someone that's 100% disabled veteran. Free car registration every year. You don't have to pay for car registration.
Wow.
And so
I
much
didn't know
more. And if you need like any transportation to medical visits or just to go into the VA for whatever reason, there's a program through Lyft that could give you free rides.
Wow.
Yeah.
Awesome.
So it's
That's pretty
neat.
cool.
That is good to know.
Yeah.
Yeah.
All
I
right.
don't know a
Sorry.
little bit of
I
everything.
threw us off on a tangent
Please,
again.
no. The more we speak, the more we educate. And that's
Right.
the point,
Yes.
right?
Absolutely.
So we kind of went over this before, but is there a limit to how much a VA has in buying power? I know you said 3 million.
Yes.
So I guess we kind of went over that already.
Yeah.
Yeah. Okay. So we can move on to the next question.
All right. Next question. So, VA appraisal. Now, I had to actually fight on a VA appraisal, and I think, correct me if I'm wrong, they're the only ones that offer an appeal period. Where in this, well, and I'll tell you the story. So in this
What
case,
happened?
the appraiser didn't, went out, did everything, but for whatever reason, he on the comps didn't include the garage or the lake view. So then it obviously came in lower
Right.
than it should have.
Yeah.
So I didn't know that at that point, and I went and I appealed it. I sent them my comps,
Good.
showed them why they're higher or they should be higher, and they went and they adjusted it. So,
Good
other
job.
than that, is there any other difference between the VA appraisal and a traditional appraisal?
No, the only difference is we're going to need a termite inspection, but on both conventional FHA, VA, you can appeal the appraisal. You got to have really strong evidence as far as comps
Right.
that they didn't use to be able to get it appealed and overturned, but it is possible to do.
Yeah, it was a good fight,
Yeah.
but I mean, I got it. Thank
No,
God.
especially if you're missing a garage, like that's
Yeah.
a big
Yeah.
deal.
It was a big deal,
Yeah.
and the lake view, which
Then you're
obviously
missing
adds-
square footage.
Yeah.
So you're making something that's bigger or smaller and taking that away from the client. So
Okay.
good catch.
So, all right. So there's nothing. I mean, it's basically the same thing.
It would be the same process. There's some key points that I'm going to touch on, even a different program. So FHA and VA, if you have an appraisal done, you can't just go to another lender and then order a new appraisal. Like it's going to follow you.
Especially
Whether you
the,
go
the
to,
FHA.
yes.
Yeah.
For how
So
long?
that appraisal is going to follow you for that same property. Is going to follow
for how
you.
long does that stay?
I believe it's 6 months.
Okay.
Even the
Yeah.
conventional.
The conventional doesn't follow you.
Okay. The
Yeah,
FHA.
you can-
I know the
FHA and
FHA
VA.
follows
You can be with one lender conventional and the deal falls apart. You go to another lender, same property. You order a new appraisal, pay for it, of course.
Right.
And if they happen to come in a little bit higher, then you end up using that one. But you just can't do that with the government loans, which FHA and VA fall under government loans.
Got it.
Damn government. Scratch that. I don't want
Nah,
that.
leave it in. That's good. We need some
Oh.
controversy in
That's a
there.
So
Bring us more people.
we know that the VA loan offers zero down payment. They don't have to give anything upfront.
Yes.
So on top of that, can they stack seller concessions and ask for closing assistance in addition to not coming up with any down payment?
I mean, if a veteran gets really lucky, he can almost come in with almost no money down.
Wow. Okay.
Because if we get a motivated seller that wants to help this veteran buy this house, and they're going to make a lot of money out of the equity that they have, and they're willing to give them money to cover all their closing costs, then they don't have to come in with the money for the down payment or closing costs. We can also request a seller concession to break a lease. So if you have one of your clients that just signed a brand new lease and he's like, oh, I'm not going to home shop anymore because I'm tied down to this apartment for another year because I don't have money to pay for the 2 payments plus the penalty fee.
Right.
Well, we can always request that from the seller to give it as a concession and then help the veteran get out of that lease.
Okay. That's yeah.
So that's another
Helpful.
advantage.
And especially in this market, we have a lot that we ask for concessions because the market it's a buyer's market. So take advantage.
Yeah.
And if you're a veteran, go for it. Get out there, and if you're looking to buy, do it now while the market is really in your favor.
Correct.
The things that are in your favor as a buyer, whether you're a veteran or not, is one, you're going to be able to really negotiate a good price for yourself and get your seller concessions because the competition's not there as far as the buying pool, but the sellers are very motivated. Because if you wait when rates come down, that same house you like, 20 other families like it.
Exactly.
So now you ended up paying more for that house because you wanted to wait for rates to come down.
Correct.
When you can just sit back and watch everybody else fight when you already own the house, and then you can just refinance and take advantage of the low rate, and now you have a lower payment.
You can say that again. God, I've said that so many times, and some people don't get it.
If I had a nickel for every time, a penny for every
penny
time,
for-
I'd be rich.
We'd be retired.
Yep.
Yeah. That's a lot of pennies and
That's a
nickels.
lot of
Yeah,
pennies.
it
That's a
is.
lot of people we talk to. I mean, we say the same thing over and over and over. But everyone's waiting for the rates, and I take advantage now with the prices, and then when the rates come down, if they come down, then you refi.
And that's the key word, if they come
If
down.
right,
Yeah,
'Cause we don't
I
know
mean-
what's going to happen.
Exactly. Now, while we're on the topic of interest rates, one thing to point out too, the conventional loan versus a VA loan, the rates on VA are typically like 1% lower than your VA loan. So that's
Cha-ching.
a big advantage right there too. If you're a veteran, you're already going to get a lower rate than what's available in the market.
So, depending on credit score, or is it automatically
Well,
veteran
assuming best case scenario, comparing a best case scenario conventional, best case scenario VA,
Okay.
rates are lower by about 1% or a little bit more for veterans.
Okay.
Yeah. Once we get into the nitty gritty of like what the veteran's credit score is, and that's going to determine exactly where they're going to fall in interest rate.
Okay.
All right.
Yeah.
Good to know.
Last question. So, what are the biggest myths or misconceptions that people might have towards VA loans?
People believe that they can only have one, that they're difficult to close. So some realtors that are not familiar with the loan or never done one, they heard from somebody that it's very difficult to do that transaction. Then there's a lot of my peers that simply are not familiar with the program, so they shy away from it because they never spent the time to learn about it when it's not a difficult program to work on, and you're doing a phenomenal service for a veteran to become homeowners. So that's one of the myths. I would say the other myths too is
How about closing? Is that like something that they think takes longer
thank you.
because it's
That's
a
where
VA
I was going to
loan?
go, and I kind of like spaced out. So another myth that a lot of people think is that a VA loan is going to be this long process. Like we can get a VA loan done in 15 days, especially when we have, W-2 employee, good credit. Doesn't have to be excellent, pretty decent credit, good employment. Then it's going to be an easier transaction that we can push through quickly.
Is it more difficult for VA loans to do 1099 buyers?
No, because it's the same.
Same?
Whether
Okay.
you're 1099, self-employed, like I'm 1099, and my business has a lot of expenses. So my net number is very low.
Yes.
I'm qualifying for a mortgage. I can't use my tax returns. I have to go bank statement loan like a self-employed
Right,
borrower.
non-QM. Right.
Yes. And at that point, I had to put 10% down minimum. Yeah, for non-QM.
Right. So okay. So VA loans.
So, yeah.
So
on
how
the
would it
VA
work for someone that's like us, that we have a lot of expenses that we write off?
Yeah, at that point, we wouldn't be using the VA loan.
Okay.
We would have to
We have to do a non-QM.
qualify them non-QM,
Okay.
yes.
That makes sense.
Right. Yeah, that's why I figured.
Yeah, and some other key points too with the loan. I mean, once you are in the loan as a veteran and you're already getting the low rate, but you see that rates come down, we can always do an EARL, which is an interest rate reduction loan. And in some cases, we don't need to do an appraisal or any paperwork. It's just the application. We'll check the credit, and then we reduce the rate.
So
It's a very simple
You
process.
just modify the loan?
What's called an interest rate reduction loan.
Right.
So we do give them a whole new term.
Oh, so the
Yeah.
clock starts again.
Yes,
Okay. New mortgage recorded. All
correct. They get a new loan. It's going to be with a new lender. Because modifying it would keep it with the same lender and then changing the interest rate
Or changing the
monthly
terms, yeah.
But this would be a whole new loan
that. Okay, but without the whole
without the long process.
the long process,
or all the paperwork.
Well,
It's more
the only-
streamlined.
Yeah, the only difference would be no appraisal.
Correct.
You still have a regular closing.
No, we don't need tax returns, W-2.
No, none of that.
No.
But
Just a
you-
credit report, no appraisal, and an application.
Okay, same
Yeah.
closing costs.
And then, yes, you still have closing costs, but now they're financed.
right,
So you don't have to pay
you don't
them.
have to pay them. Right, it's not out of pocket.
Correct.
Okay, Edgar, my friend, thank you so much.
My pleasure. No, thank you so much for having me.
pleasure.
I love talking about this topic, especially because my son's a veteran, his girlfriend's a veteran.
Amazing.
I have friends that are. So anything that we can do to help them, I'm all for it.
Me too.
I really, really support our troops here and the ones that are still abroad. So
Yeah, and-
thank you for coming.
No, my pleasure. And one last thing, if I can add,
Of course.
when you work with us at Patriot Pacific, we're not going to charge you lender fees as far as a broker fee or an origination. And in most cases, we're able to give you a credit towards your appraisal at closing.
Wow, that's amazing.
So that saves them some additional money.
Yeah, more money to save.
Yes, more money in
Yeah.
their pocket.
All right. So, guys, thank you for watching our show today. Obviously, always leave your comments below. Send Edgar a shout out. We'll have his link posted as well, so you can
And
check him
app.
out. And app, that's right.
Yeah.
I almost forgot about the app.
His app.
So, give us a little.
Yeah.
I'm
So
trying to close it out.
So I do have a branded VA app that it has over 52 different videos of the most common VA questions. They're short little videos, about 3 minutes long, but it really dives into the most common questions that people have when it comes to the loan. There's some calculator tools that are available for you too as well. And then a feature that's good for realtors and for the clients is the condo approval lookup, because it shows you a map rendering of where it's located. It uses Google Earth, so you're able to see exactly what's near it, and it gives you the total address. Versus if you use the VA website, it doesn't give you the full address of the property, but my app does, and it's constantly being updated with the VA,
Awesome.
Which is a lot
and
of
it's
help.
free.
It's free.
Yeah.
Awesome,
you.
Edgar. Thank you so much for joining us today.
No, my pleasure.
Have a good one.